Did the stream freeze? Yeah, I'm here. Oh, weird. Okay. What? The stream just like... How long was it frozen for? Yeah, here I am talking to myself. I just noticed that it was actually frozen. Weird. I'm here talking to you guys the whole time. Oh my goodness. I'm just now coming on? Oh my god. Like this whole time. You haven't heard. Oh my goodness. Okay. Well, gotta say anything. Oh my goodness. Okay. It's so weird. Oh my goodness. I'm sitting here this whole time, like, announcing that I'm not going to make any trades. Things are looking kind of bad. Sorry about that, y'all. All right. Smash the like button on the stream. Let's go. I'm just talking to myself. I love doing that, I guess. All right. Resilience was really, not really that great. We started falling to the bottom of the box. Was I going to long edge pressure or not? Mean reversion of 10 points. The answer was no. With negative resilience, it's going to be hard fighting through here anyway. So I kind of set out. Hit hedge pressure, Nasdaq's walking its hedge pressure, and the question is, would I do anything here? I don't think so. What's going on with VIX today? VIX has no discernible pivots either. That's it. That's my morning thoughts. Mean reversion. Should I long at hedge pressure? Yeah, and I didn't. We started losing resilience like right out the door. I mean, it started falling down, hitting like negative and just chilling. So, So, let's set this one out today. Definitely a Monday. I was never live. Oh my god. Y'all gotta scream at me in chat like, Matt, where's the stream? Everyone's like, hello, Matt. And then, probably somebody says stream live or my froze, and I'm like, oh, what's going on? I was never live. It's a Matt error. Okay, so we don't really have any good setups today. There's really nothing to go on. Yep. Not enough info to short. Definitely not good enough to long. So it's going to be a fun, chill, easy day. There's not any really big news events to kind of stimulate the market either. I think today's kind of a light day. Here I am talking about earnings, all that stuff this morning. Y'all missed all of it. Oh, well. I even got up early, too. All right. You have a medium to heavy, news week this week. You got CPI, PPI, a bunch of stuff coming out. It's going to be some big mover days. Tuesday, Wednesday, Thursdays, the jobs data and stuff. I mean, pretty big. Building permits on Friday. So it's going to be, medium to heavy news week for sure. Earnings going to be big on Thursday and Friday as well. So market could be pre-positioning for some of the bigger earnings. Thursday's probably one of the bigger days for, I think, retail side of trading. Walmart, Alibaba, AMAT. Obviously, it's pretty decently sized companies. Friday, some big ones as well. So it's gonna be some surprise volatility here. Now, as I was talking about Triple B earlier, I'm just using it from Thinkorswim. We're in this region right now where when VIX is trading above the Triple B line, which is here for the month 1829. You can see that VVIX is higher, right? So the VIX, the volatility itself, volatility zone VIX, like its choppiness of the VIX is higher here than it is down below. Down here, it's nice and tight. If you see that, tight. So volatile regime, there's overshoots of pivots and things like that in your trading. Down here, the market should trade a little more resilient, should be tight, like tighter pivots, hitting pivots and going. It shouldn't have volatility out of nowhere. So like sell-offs and hedge pressure breaks, you should be more scared of them here than here. If you break hedge pressure when VIX is like this, it could just be choppiness and holding. If you break VIX hedge pressure down here when it should be shouldn't be chopping, then you know it's some genuine selling pressure, right? Because it should be a thicker market. The wall should be thicker, you know. It's looking really bullish. Oh yeah, monthly maps. I'd say though it's looking stable and non-volatile. So market is looking good. The market like does not want to collapse or crash. Today might be an exception to that rule. My thoughts today on the S&P is that one could hypothetically, which I might take a float roll, scalp on the way down. If it does do that, not enough indication for me to one long. This is definitely pointing down. Yeah, monthly maps stable. So whenever you have this sort of shape to this, you know, if your cheat sheets, and this is from the Rocket Scooter cheat sheets, by the way, so everybody get your cheat sheets handy. I open them up all in a browser every morning. You'll see that bull side bottom is sloping to the bottom, right? Bulls are long and accumulating more still, according to monthly maps. Top of the bear side sloping down, bears are exiting. So you got short squeeze and long accumulation. Both positional data sets imply that the market is still finding support. There are buyers and shorts covering on the way down. These damn MR opens. I hate them. Why not short HP rejection? Yeah, that's what this is right here. That's what that was all about. Correct. That is correct. I wish I was sleeping in this nasty rainy day. Thoughts on the negative downgrade? What negative downgrade? Did I miss something in the news? It is a Monday. Pretend I don't know anything today. Did that? Oh, the Moody's? Oh, really? Hold on. I just ran straight to my stream. I read the news. I didn't see anything about it. Hold on. Moody's goes. Oh, so Moody's downgraded us as well. What would they? Hold on. Lowered its outlook on credit rating to negative from stable. Oh, so Moody's now joins the party. Oh, okay. They might downgrade it or they will downgrade it. Was it Friday? Oh, that's why I missed it then. I had a lot going on this weekend. Warning to America. So it's a warning, right? Okay. Your last AAA credit rating is at risk. So the outlook changed to negative. So they're basically warning the U.S. That they're going to give us a downgrade. So no downgrade, just a warning, right? Moody slap. We need another code name. We had Fitch slap, which is great. But Moody's needs its own buzzword. Let's think of something cool so we can first tweet it so we can have the virality. Fitch slap was converged evolution. I think a lot of people came up to the same conclusion. We all called it Fitch slap. Let's take credit for something. You know what it means to be an influencer, be viral. Same old, same old. The Moody Blues. Ah, there you go. Mood killer. I'm stealing all of this and taking all the credit. You suckers. I'm just kidding. Y'all don't get any of the royalties. All mine. Wah. Moody swing. I like those. Those are actually really funny. Mood swings. Markets mood swings. I like that. We need some catchy headlines for the tweet. All right, so just analyzing the morning. Right, very possible to take a hedge pressure short off of 439 if we do go up and tap it. I don't disagree with you, Cartmill. I think it's a great idea. Whoever said that. So we're gonna still be sensitive around bond auctions, right? That's causes some movement. So it looks like we can have like a daily, dose of catalyst. different shit related to Moody's and all that. So next time we have a bond auction, we have to be careful. So tomorrow is CPI day. This is gonna be a big moving day. To analyze that data real quick, let's look at the year over year, which is the kind of benchmark data point talked about more than anything. You get a little uptick, right, in CPI. So we're having a secondary. While we are dropping, over the year over year is dropping itself. You can still see that the change is still kind of growing. This is just a residual effect of everything going on in the economy. Like normally it's just going to plunge to zero. Obviously, sometimes you have second waves as the change balances out. So oh, and Fed balance sheet on Thursday. Oh yeah, don't forget, guys, quantitative tightening is still a thing. I know everyone, we don't think about it, but this environment, this is the first time I've ever traded in a QT environment. Whatever year the QT. So you have to remember, this is going to be part of your own trading education as well as mine. I've never seen a choppier bull market. That's for sure. And that's the lack of Fed liquidity. Like this market moving up and down and seesawing for years. Chops up, chops down, goes up, down in waves. It's the first time we've seen it like that, really. Preventative Moody slap the PMS. I love it. Auto loan debt crisis looking imminent per autumn. We're like, really? Okay. This kind of reminds me of those moments before the 2008 crash. You guys remember, what was that? The Big Short movie? 2008, or that era. I think 2009 was an actual crash happened. All the banks themselves, like the ratings agencies, weren't rating mortgage bonds correctly because they were being bought out by the banks to rate them a certain way until the banks themselves were short the market and buy everyone's credit default swaps. And then bad ratings agencies, one can only assume that with the ratings agencies right now finally lining up, that whoever, not accusing anyone of being like corrupt or anybody's pocket, but that did happen before. Now at the similar time, everything's getting rating agencies. Is it just a natural occurrence, or did somebody finally short the amount they want to be short? What's going on here? Yeah, how many credit default swaps do you owe, Mr. Baum? I remember that scene. Is there a reason you like this market to go down? Don't forget, we have Black Friday going on. Special. We're doing a 60% off of the yearly, 20% off a lifetime. Take advantage of that while you can. If you guys are wanting to sign up for Rockets here, that's about as cheap as ever going to be. All right. Do we take the setup today? What do y'all think? Hedge pressure tap, short downside. We hit hedge pressure on NASDAQ. That is the balance point. If there is something, let's take a stab at this. Should we? Yeah, let's go for it. R&R is pretty good for a 20 point. Yeah. I don't hate it. Correction. So learning with DD high, should we float into half gap? No. No. Let me rephrase how the DD relationship works. DD doesn't change direction. It only talks about support. From a middle. Hold on 1 second. Let's get right here. DD. So if you think about it like this, right? From the middle, it tends to want to go this way rather than this way. From the middle. So if it loses the middle and it's not doing that, I'm not fighting it. Down here, there is no run on DD. Like the D doesn't apply down inside here. So the way that you read what he's talking about. I'll show you real quick. Great thought. Okay. DD ratio being bullish. If you're in the middle, more often than not, it does float to the top. Now, because we open and it's not floating to the top, that's one of the reasons it's making me scared. It's actually breaking to the other side and doing what it shouldn't be doing. So that's why one of the reasons I want to short. Right? Great setup. Great question. So if it opens in the bear zone, the highest I expect is that. It doesn't mean it goes there, which makes me want to change the drawing. If that's confusing, it just means that the highest that it goes is the tap. More likely to close in the zone it opened in. So this is more likely. Now again, this isn't telling me the direction. The market liquidity maps can tell me the direction I'm gonna look for. But this is telling me that even if there is upside, I don't play past the bull side. So in the middle, then the middle is where we stay. So I expect that a mean reversion tie pushes to the upside. We don't have a mean reversion tie. It's not floating in the middle. Does that make sense? So DD doesn't float the market at all. It just tells you the dependency of, well, like I'm sorry, DD doesn't tell you from here that it's going to float up. It tells you from here that if someone put a gun to your head and had to break the tie, your bet is that it more likely taps there than it taps there. If somebody forced you to make a tie break from the middle, that's the difference. So there is no actionability anywhere outside of here off of DD. If you open here and somehow it breaks and goes here and I was long, I would cut my long out right there, expecting that more often than not, it will likely fade that out. If we're trading up in here, then that is support. So the real way to read DD is the following. If price opens in bull zone, you just have the word support right there. Price opens in bear zone, you just have word resistance right there. Price opens in the middle and is at the middle. Price is here at the middle, then it would just say the word support right there if it was bullish. If you're at the middle and it was bearish, it would have the word resistance. That's basically what DD is. Those 4 words. Everyone get it? So I'm not using it to long the market to bet that it breaks bullish. The resilience indicator already limits us from resistance there anyways. And while I could take the gamble from the middle that it would go up, it moved too quick for me to even take that. Plus these little 1 point mean reversion trades aren't really the trades I like to take. That makes sense? So NASDAQ is already at lower DD band right now and trying to break it. Let's just quickly analyze that. Do I have the right numbers? It looks like I do. So NASDAQ's looking to flip to the irrational side. So yeah, just breaking through hedge is what I said this morning as well. Whenever you have the environment where the VIX is trading above its triple B, our special guest is here today. He has something to say about the market. He says, down. Is that what you're saying? Okay, cat. All right. So price is trading up here. The VVIX is higher, and so VIX itself is choppier. You likely have overshooting pivots, right? Down here, it's a lot tighter. Markets will hit a pivot and bounce really quick. And we're in that range where it should hit a pivot and bounce pretty quick. And if it doesn't hit a pivot and bounce, I'm scared of it. So right out the door, we start resisting, there's pressure here from the resilience, right? We get down to hedge pressure and push right through it. I'm already like, oh, this is bad. So here's that razor sharp pivot I look for to try to trade down. And that's why I'm shorting, right? Just because I'm shorting on hedge pressure break off of hedge pressure. That's not a terrible setup. Plus, we had a DD float failure right now, right? Because Nasdaq hit its own lower band. So market's going to be 100% random from here. Now I'm in the realm of coin flip. This is coin flip day, right? Nasdaq is already DD band break. We have a float failure. This is coin flip on float failure. Ideally, this is something we can look for. But again, the market's random from here. So going to be hard. This is just going to be random from here. Now we had a... So float failure is a rule that states if your DD ratio is bullish and instead one or any of the index futures makes its way to this lower band and stretches to the downside and touches the band, which the Nasdaq signal already says it did, then the market can be random from here. So it'll be very difficult. Let's read this news today. This is going to be a busy news week. Consumer expectation. You can see your DD bands. If you click this risk interval DD tab right here, you'll see them printed right here. If you want them automated on your chart with the liquidity maps indicator, you just need a futures data feed, and you can get that by connecting to a broker. We currently have an edge clear connection. You can do that. I'm working on something real quick. How's the trade doing? Pretty good. Now res is starting to recover. What do we think? Yeah, now I'm thinking about it. I think we might actually get a bounce here. So we're exploring right now how we're gonna get the arrows and supports and resistances drawn on the chart with like the kind of the new automation portion of this. We're actually talking about revamping this little side widget here to do it, because the more we're looking at it and analyzing this, it's getting really cluttered with the candles, with lines, with all kind of information drawn on top of this. What we might do is create a special, these are just pictures of the liquidity map that we've created, right? We might create a special way. Yeah, I probably should close that. I haven't had like a good solid setup the last couple days. So the idea is that for like how liquidity map arrows are drawn in here, we're probably going to communicate like the same information. Hold on. That we want, but over here. We have more freedom to draw whatever we want here and make it less cluttered. Without the candles, you can just be able to reference. So this letting you guys know what we're thinking about. Can hedge structure act as pivots multiple times a day? Sure, it can. I usually like to trade the first pivot on either side, like the bounce there or the reject there. But it doesn't mean you can't trade multiple. There's no science to how many times something can bounce, and you just gotta have to hit it and stick with it. If it's 4-2M, market's not irrational. Yeah, so they can pivot as many times as they can. Like market, I like to trade the first one, and that's it. Like if I make a trade and get out, I don't like to trade it again. But some people do. It's just not how I do it. Once downward prop target, it would be logical to go long. Possibly, but you do have hedge pressure breaks, so I don't really like to bet on much down inside of here, right? So where's there any downside support, right? You got DD band right here on S&P, right? You have a hedge pressure break for that to happen, right? You have a red light. So any long or scooping up the bottom, you know, very, very, very small, even if I were to take a scalp. Which again is dangerous because you're already, 20 points in a hedge break. So if one were to scalp for like 10 points or something small, you realize that it's in a very dangerous territory. You'd have both NASDAQ irrational and on hedge pressure break as well under those conditions. So the question is, would you even want to trade to begin with? Joe says, I talk about the DD band on NASDAQ, why it's way up there. What do you mean way up there, if you don't mind clarifying? Yeah, the idea we're not getting much volatility today. This expansion very rapidly, tightening right back up. There's not any momentum to any downside moves. That's why I don't like it. It's not building any downside pressure. I'm gonna close it. Whatever. I don't like it. I'm gonna call that a day today. I think that the lack of volatility is gonna create that kind of downside. I think even if I'm right, I don't care anymore. It's not worth it. Yeah, so, yes, we did. We broke our DD open. Yeah, that's definitely irrational, like, market, right? Oh, literally the second I close out, we get a dump and res. That's okay. That's okay. I'd rather just sit out and let this one simmer and watch it from the sideline. Yeah, as Kevin said, there's not a lot of momentum being built off of this, so I really don't want to. While the R&R is good there, I definitely don't want to long. I'm going to walk away from this. Yeah. QQQ moving the market today. Yeah, I think Ollie's right. With the bounce here, and QQQ bouncing on a what we call a float failure, it's just kind of good to let this one simmer. And down like $100 or something. You don't really get good setups. And again, it could be a pretty decent run if I was right, but I'm not in the mood to gamble. Oh, by the way, so Robbins Cup, right? Y'all hear about this? Some kind of World Trading Championship. So we have other brokers, right, that can connect through Rocket Scooter right now. So GFF is the next one. They do the quarterly Robbins Cup. If you guys want to enter the Robbins Cup, you'll be able to trade it through Rocket Scooter now. So those of you, just FYI, well, maybe not now, but like in a couple of days, when it gets all set up and turned on, you'll be able to do your Robbins Cup trading through Rocket Scooter. So, and all the gurus out there like to point fingers at each other, like, internet tournament, I dare you, and like none of them actually do. Should I just go in there and win it? First place right now, I think, is only up like 30-40% or something on their account. What am I up like? 80, 90. I would be winning. So maybe I'll jump into that and just quietly do it and win. And then at the end, when it's like, oh, who's this guy? Just dip in front of it. Similar idea to sell ZTE calls in the bull zone. So, not advising you on a trade you're making. If you're asking me scientifically, if I think that if you're in mean reversion, breaking to the downside is selling calls on the bull side a higher probability setup. Yeah? What's up? Vuki says yes. He likes that idea. You hear him? I mean, you have a really clear cutoff of when they, even on theta alone. I mean, it's, for zero DTE. I mean, it's not a terrible idea. It's not advice for you to do so. It's clear I'm not giving you any investment advice particularly, but scientifically, that is the rule we teach. If you're in the middle, you can sell calls on the call side and sell puts on the bear side. So yeah, wasn't getting a lot of good, not good confidence about this. Glad I closed out. Yeah, not really, not a, not a really appetizing setup either way. You know, there was the play. The play stopped really showing signs of momentum, and we're just kind of trapped in the middle. I don't have any desire to do anything. Yeah, choppy today. All right, so everybody know, we'll probably just call it quits earlier, but make sure you go to the Discord. Make sure you check out the Black Friday deal if you're interested. It's in the link. You go down to the. Oh, actually. The link is not in description. Got so much text. Whatever. No announcement of historic liquidity map right now. The thing we're working on is getting the information of the supports. We're getting DD resilience and liquidity map arrow support resistance drawn somewhere. we've pretty much decided against drawing them on the chart. It could be get cluttered and looking weird. We think we're going to try something new, and if it doesn't work, we'll move it to the chart. We're going to try to create a special custom widget here that conveys all that same information. It seems to be, instead of drawing over the chart, we just draw here with no candles to have like a full support resistance chart here. Like you can have the word DD resistance. So having like the same information drawn here with more flexibility. And that's what we're going to try to get first before anything else. Like historic liquidity maps don't really they don't really fit into this project scope right now. They're needed for like a bigger piece of what we're building for something else, and it's part of that effort. So like to just go halfway just to get to there and abandon the rest of the work, we wouldn't do that just to bring up that feature. We would continue down that path, but that path is a lot of work for a lot of things. It's going to create historic data, revamping the database, migrating custody, and a lot of stuff of some of the information that like the data pulling responsibilities. You have to move everything around and revamp everything for historic data. And once we do that, we want to create what we want to create out of like a back tester, right? So all that goes together. So it's not just a quick and easy transition that there are historic liquidity maps on there. It's a big project that when we do it, we have to go the whole way through. And so what we've done with that so far, we actually did some legwork to start that, but it's gonna be like a whole epic. We gotta start to finish that one process, and it's a lot. And so after we do this part, which is the educational part, these little, where it says liquidity map right here, we're going to draw more information on the liquidity map instead of drawing arrows here. So it'll probably convey like the same information. Why aren't you able to use TradingView futures ticker? Well, because we're a different company than TradingView. We have nothing to do with TradingView. So whatever they do, they do. And what is my win-loss ratio the last 2 weeks? Oh, you know, honestly, I am probably down the last maybe like 6 or 7 days. I'm probably down more than I've been up. I'd say. When is the marketplace coming? That's being worked on now. It's already launched to a website. It's just not announced or functional yet. It's literally there to play with. But we're building out features for that right now as we speak. So we have a dedicated team working on that. So we have a dedicated team in the white label portion of the business too, building our platform for others who want cloned versions of it. Those are side avenues. So Jesus, we have our own futures connection. So TradingView is a whole different ball game, and their platform has ads in it, and they make you buy the data outright. And there's other ways they get you to pay for it. We don't have our stuff set up like that. We have the easiest, cheapest way to get futures data, which is just to pay a broker $1 a month for top of book and $10 a month for an API fee. I mean, it's just easy, cheap way to get it without having to mess with ads, or you actually go in and subscribe and pay for it and stuff. And so the tickers that CQG uses are the tickers we go with. So F.US is just the way they classify their nomenclature. But you should have multiple charts in the platform instead of popping out windows. Sometimes that option is needed. Today, tomorrow, I got to trade while looking at phones. Oh, okay. Can you put that in the wish list for that particular reason? I never thought of that. In mobile, Can you put in a wish list? Can we enable the trading view multi-chart feature? Let me ask him. Let me see how available it would be. First day here, but you notice on your Rocket Tutor Pro, the data is lagged. There's no lag on data. What do you mean? What's up, Josh? Oh, welcome, first day. When you say data is lagged, like your candle data, like it's should be real time. There is no lagging at all. Did you read? Did you read the disclaimers on the data? Because what you're looking at right now, are you comparing like the chart to another chart, or we have different data for base Rocket Scooter, which you're using. That'll be different than like what TradingView's data looks like. So we don't have all the exchange candle data, all the exchanges. We have like for y'all's package right now, for this stage of our company, we have right. So it's not delayed. We just don't show all the historic data for the candles, because that way you can get free data and we don't charge you for it. It's like at this stage of the company, that's where we are. There's a whole note when you signed up. Should have told you everything about that. So we're only showing 5% of historic volume on the candle chart. It makes your package cheaper for you. Yeah. Right. So you have real-time data, but you don't have real-time data from every single exchange out there. It just tells you it's a limited window, but we don't use candle data here. So the whole point is that it's only for show. Like the actual price itself is accurate in real time. Like the current price, that is accurate, but the history of the candles, yeah, we don't use all of our stuff is not even, we don't use candle data. That doesn't make any sense for us to go out, redistribute it, and then charge you guys $5-10 a month for it when we don't use it. So we don't buy 100% of the volume flow of the time and sales for just candle data, which is just the candles. It gives you a general idea of what has happened for the day historically, but all you care about is the real price, and the real price is accurate. Futures, we have full real-time 100% of the data. Different. So our way our style is here, we don't use candles or candle charts or multi-time frame, none of that. What matters is the support and resistances on the chart relative to the current price, which is the dashed line. So in that particular case, that's all that really matters. But it's a great question. When the marketplace comes out, we're going to have upgraded data feeds that you guys can purchase. So we've settled on this, and we're going to let everybody know this is how it's going to work. When the marketplace comes out, everybody, including Lifetime, doesn't matter. We will have a 100% volume data feed option, actually, by the way. You will be able to get that full data package, and it will be $5 a month, something like that. And everybody will have to pay for it if you want it. But that is coming. So if you guys had lifetime, you will still have to pay for your data feeds if you want that option. So that is the next. We asked that everybody is probably going to be understanding about a $5 a month thing. But since it's a tremendous overhead to get it, we'll just split the cost as a community. Makes a lot of sense. Broker and futures is a whole different story, Kev. Futures and equities, that's why the industry is the way that it is. The futures and equities are completely different industries. So they all, and options as well, they're all handled differently by different groups. And the way they sell and transmit and distribute data is all done differently. So the futures side of things is so messy and complicated because futures is messy and complicated. Stock's a little bit easier. And stock exchange, you know, where the trading happens, the stock exchange sells the data. There's not a bunch of crazy stuff like clearing firms and introducing brokers and FCMs and all that. And futures just has a bunch of cogs in the chain as to how futures was designed. So now the futures data is not just like you go to the CME group and buy data and make it that easy. You had all kind of places in the middle, and they charge a lot for it, for whatever reason they do. So the broker route is how you get the data cheap, and everybody out there in like my boat that has a platform has some kind of roundabout way they do to get the cheaper data in the hands of the customers. So for you, you don't want to go pay $75 a month just to have DD bands printed on your chart. So if you open a brokerage account, the broker itself can supply you data for $1 a month, because they do it because they want you to open a trading account. The CME group wants you to trade, and they bait you with cheap data. So because it's available, that's the route we pretty much take. Now, if you do like where we would have you upgrade and buy data, we'd have to buy a distributable data package, and that's very expensive. We need like, you know, it'd be 10 times the size to even begin to explore that. But then we would charge you more than the broker would anyways. So does that make any sense? That's a great question. Yeah, so you already pay CQG and Kinetic. Yeah, see, that's the thing. Like, we are CQG. You don't have to pay twice if you already have a CQG account, Kevin. They should have told you that when you signed up. But if you get a hold of Edge Clear, or yeah, me get through Edge Clear, and if you already have a CQG account, they just need to make sure that your existing CQG account in the CAS system points to Rocket Scooter as well, and it works in any environment that you have CQG in. You won't be able to open up the platform in both places, but you'll be able to see it. Like if I were, like my CQG account right now, I can go to CQG's own desktop app and open up my trading account there and start making trades, but then would disconnect me from Rocket Scooter. If I go to Rocket Scooter, it disconnects me from there. But you only need one CQG account that works in all the CQG things. Just FYI. So you don't ever buy like a second CQG account. That's what I say, you already have one. All right, we're gonna call it a day. No big trade today. We're gonna sit out. Try to take a little short scalp. We got it scared out of the position, didn't like it that much, so walked away. Call it a day. Let this market kind of settle and reset. We have a big news week anyways. So it's getting hard to see and guess what's gonna happen. Monthly maps will show it being very bullish, so trying to scalp a short along the way just kind of didn't seem like a good idea in light of, you know, getting a good, decent setup, and once it didn't play out, I just closed it out. Pretty good discipline. I like having good discipline at times. Makes it a little bit easier. Yeah, so check this out. Don't forget, we're refilming all the videos, and so now the education's on the website. The current most awesomest videos are there to learn how to use Rocket Scooter platform, and feel free to check it out. Growing bigger every day, you guys. So happy to see this community thrive. We love you all to death. So thanks for being friends and family. Check out these Black Friday deals, 60% off a yearly. It's a really big popular one. I mean, that's a very super, super cheap way to get the platform. It's worth it. 20% off lifetime as well. Go to the website, more information there, and I will see y'all later in Discord. We'll have a little Zoom call.